All right, welcome into Market Day Report. I'm Scott Schiller, otherwise known as the Cow Guy. We got good news and bad news for you. Good news is, you got me for the entire day. Bad news is, you've got me for the entire day. We'll see how that works out, right? It's going to be a little bit of a better, well, it started off to be that way during the radio show. We had some overnight news as far as earnings goes, but let's see how our markets closed, or at least ended the overnight session. We'll start with corn. Corn just up between 1/2 and 3/4 cents, so 2 to 3 ticks higher across the board. March up 3/4 cent to 4.11 3/4. I don't like to look at that low though, 407.5. Ouch! But we're finished in the middle of the range. If you go out to the new crop east, that was up a couple cents, a couple ticks. 457 3/4 is last out there. So between 1/2 and 3/4, or between 2 and 3 ticks better across the board when it comes to corn. Overnight, how about soybeans overnight? What are we doing there? Well, we were lower. 2.5 cents lower up front, and that's March. 11.58 1/4 last, and that's just 1 tick off the low of the day there. That's harsh. Let's go out to July. That's down 2 1/4 cents to 11.71 3/4. We're 1/2 cent off the low there. So no bueno when it comes to the beans. Let's take a look at Chicago wheat. What's that got in store for us? Nice to see a little bit of a rally here. We're up 6 1/4 cents in March overnight. 5.89.5 is last, and that's about 1.5 off the high of the day. We like talking like that, don't we? 3 3/4 cents higher in the D. 6.01 3/4 is last, and that's, let's call it 2 1/4 cents off the high of the day there. So not too bad. We're trying to put a 6 back in front of it. That's the big news in wheat, right? Deese has got a 6 in front of it. So let everybody know. How about the hard red in Kansas City? So we go from Chicago to Kansas City. Kansas City overnight up 9 1/4. Got some strength there. 5.86.5 is last there. And that's about, 3 cents off the high of the day. But let's all go all the way down to the Deese. There we've got another 6, ladies and gentlemen. 5 1/4 cents higher in that Deese hard red wheat in Kansas City. $6.75 was last overnight. So we'll take that. That's about 2.5 cents off the highs. That's hard red in Kansas City. Let's go to the spring wheat in Minneapolis. That's overnight. It's up 5 3/4 cents, and that March contract is 6.65. And that's right, and then smack dab in the middle of that range. It was a 16-cent range overnight too. So we've got an 8.5 cent gain in the Deese going out to the Verds. 6.94 3/4 was last overnight there. And then finally, what's going on in cotton? That's been all over the shop, right? Let's see, we're 83 points higher there in the March, and 93.43 is last there. So that's a great segue into our next guest analyst, constantly dressed in cotton. And that's Brian Hoops. He's with, what is he? It's Midwest Market Solutions, and he's the big shot there. He's the president. All right, Brian. I don't know. It's been a rough go. I come here and sit down in this chair every day, and it has, it's been one day after the other of a slow grind lower. We did have a little bit of a pop on Tuesday, but are we going to see anything celebratory today, or are we still in the doldrums here? What do you think?
Yeah, good morning, Scott. There just isn't much news out there to push us one way or the other. The numbers that came out this morning, initial claims, a little bit less than expected. The dollar's starting to firm up a little bit after that came out. So could put a little pressure against our grain markets. The dollar dropped sharply overnight, and we kind of negated some of that as we went through support, have rallied back above it now after these initial numbers that have come out. But as far as the grains go, there just isn't much news. No export sales report this morning. That's delayed until tomorrow. There was a sale of routine amounts of grain sorghum to China, kind of just considered just a routine number there. So just really looking at option expiration tomorrow and delivery period next Thursday, as maybe we can put in some sort of bottom near that delivery time frame. That's a lot of times we go weaker into the deliveries, expecting big numbers, and then once we absorb them, the market kind of has that sense of relief and starts to rally. So that may be the best news that we can hope for at this point in time. There just isn't anything out there as far as threatening weather, strong demand, or anything like that that really wants to turn the trend of this downtrending market of the corn, soybeans, wheat markets. We're seeing a little bit pickup in demand for milling wheat, and that's really about it.
If you worked for General Mills or Pillsbury and you were a buyer, right? You're a consumer. Are you buying now? Or are you waiting? What are you doing?
Yeah, you look at that commitment traders report and those commercials that you're referencing, they have been aggressive buyers all this moved lower. We've dropped about $1 since the harvest time frame in corn. They've been accumulating or buying contracts this entire period because they know in the several months we're looking at U.S. growing conditions. We're looking at growing conditions just right around the corner here for that safrinha corn crop. And that's when you can see big price appreciations because of the uncertainty of that growing season. So they're in there massively buying contracts, getting prepared in case there is some weather uncertainty buying at these price levels, that weather uncertainty could give us a rally of $1.50 in corn just on fund short covering who've been taking the other side. They're obviously just hammering this market on the short side. And if they cover those short positions, it would be, a big move to the upside in the corn market. So,
right.
Yeah, commercials are buying.
Well, we're gonna wait and see if that can happen. But it's interesting to see what your thoughts are there. And you know what? If they can make money at these prices, why not buy it? Right? That's right. What they're there to do. All right, stay right there. We're gonna go. We're gonna pay some bills. We're gonna come back and talk more with Brian Hoops right after this. All right, welcome back. Let's review where we close these markets. These are live cattle, lean hogs, and all those markets. Let's see where we closed them out yesterday. I always get tripped up thinking we're open right now, but we're not. So I'm going to say it again because I'm a little slow. But let's make sure that we see where we did close so we have a little bit of a story to build here, right? Let's talk about live cattle here for a second. They were up yesterday, just mild. We call that steady, a little bit better in the old days. April's up 37 cents to 187.70. And go out the deferreds in October. Up 27 cents out there to 185.42. Okay, that's live cattle. Let's go to the feeders, see what we did there. They were a little bit better too, except for the front month March. March was off one tick. I don't know if we can give that too many of the headlines here, but we can see that we've got a dollar range in that May. Look at that, or a dollar higher to 259.12. So that's pretty good. That's feeders. But you know what, folks? It's still quiet. I don't want to make a big deal out of it. Lean hogs, they are also very quiet. We've got a mixed market here. April was up 30 cents to 85.97, but the June was off 20 cents to 97.97. Then as you go out the deferreds, we have a 5-cent loss and a 7-cent gain. That'll give you an idea about a market that just doesn't know where it wants to go. Let's bring back in Brian Hoops. Brian, what do you think about these markets? Am I right? I mean, it just looks like not a lot going on. If push comes to shove, they would like to be a little bit better, but still not that convicted.
Yeah, you look, it's almost two-tiered market. So the February contract can't rally. In fact, it's traded lower the last couple of days because the cash isn't following the futures higher. It's kind of stagnant in that 180 area, down a couple dollars last week. No trade yet this week. And now we're starting to see deliveries creep into the marketplace. We did not see any last night, but we did see Friday and Tuesday saw some deliveries against that February futures. Meanwhile, the rest of the complex wants to move higher with the cattle on feed out tomorrow afternoon. Looks to be very supportive. Placement numbers down 12, 13%, maybe more than that. That could be where your surprise lies tomorrow afternoon is if the placements are less than what the trade is expecting. And as far as the hog market goes, cold storage is out tomorrow at 2 o'clock. It's been friendly the last couple reports. Weekly export sales have been friendly. So looking ahead to tomorrow, maybe we'll see another strong pork sales number. And I think that keeps that hog market pretty well supported up near these weekly resistance points.
Real quick, when it comes to the cattle, I mean, do you think we've gotten rid of that cloud of that negative sentiment that we had since last August, and we kind of really took a lot out of that price? Nothing's really changed out in the field. It just seems like that's kind of stayed stagnant, but we had a lot of people exit the market and press prices downside. Is it okay to get back in now?
Yeah, it's okay. We definitely have put our lows back in, and now we've seen a pretty strong rally. I think we can continue to rally because we haven't seen our tightest supplies of the year yet. The caveat, the entire last year, this year, it's always been demand, and there's some signs that maybe demand is starting to slow once again as we get to these price levels. So I think risk management is really going to be key. It's very expensive to buy these feeders right now and place them in the yards. Have to do some sort of risk management to probably some put options or windows, fences. That sort of thing would protect your bottom line.
I agree. Going forward, I really think the biggest economic indicators are going to be consumers. Anything that's got anything to do with the consumer, I think. Sentiment to retail sales to whatever, because it's whether or not they can afford it. Bottom line. All right, thanks very much. Brian Hoops coming to us from Springfield, Missouri. We're in Nashville, and I can say good morning for the first time in a long time to the great Christina.
I had a hard time hearing anything over his shirt and your shirt this morning.
Well,
so wardrobes talk.
He looks better in his than I do in mine, though.
I don't know. You both gave each other a good run for the money.
It would be gross if we switched. How about that?
Good to see you, as always. We've got a big day ahead of us. It's
right.
FFA Give Day.
Yeah.